Okay, well, welcome. The goal here is to really talk about self-directed retirement accounts, how we can first the process of getting it set up, how to use it, the do's and the don'ts, and to answer any frequently asked questions. I've been able to use my mom's self-directed retirement account to get her retired. So that's been a lot of fun. And now working on doing it for myself as well. Um, and I just kind of learn by doing. So hopefully we can avoid the learn by doing by bringing in Joel and first of all talking about the process, how he's seeing other people use self-directed accounts, what is even eligible to be moved into a self-directed account, and why people prefer these over the traditional Vanguard or Fidelity retirement accounts. So Joel, take it away.
Perfect. Yeah, will do. Absolutely. And I know the objective is to, you know, make sure that we address some of the questions that some of you have. John, I know that you might have some questions as we move along, but I've written down a few things that I'd love to cover. I quickly wrote down what John brought up as well as items that I could cover. Uh, but what I'd like to do is just start with some fundamentals. I don't have any slides, so this will just kind of be, I'll share the information, I'll pause, I'll test for reaction, and we'll just make this engaging if we can for ourselves here today. And then, of course, hopefully this information will translate well to those that are going to be listening later. I thought, again, going back to the fundamentals, what is an EQRP? First and foremost, let's just get down to the nitty gritty. An EQRP stands for Enhanced Qualified Retirement Plan. That's exactly what it is. It's a qualified retirement plan. It follows a specific tax code. It follows Section 401 of the IRC. And there are other sections. Excuse me, let me get some water. There are different sections of the IRC that self-directed investors use. I'm sure you've heard of self-directed IRAs. Those are very different than what an EQRP plan is. Section 408 is specific to self-directed IRAs. I know that's a lot of like technical talk right there, but I think it's good to lay that foundation because I want to just make known that an EQRP plan is very different than a self-directed IRA behind the scenes. Both are used for a lot of the same intentions. Both are used to take qualified retirement funds and invest them in alternative assets. That's what people want to do when they leave W-2s with their 401k money, or when they leave their small business and maybe they have a SEP IRA. They want to take control of those retirement funds and they want to invest them in alternative assets. Uh, Going back to just the difference between an EQRP and how it follows Section 401, the reason why our company prefers that product is because it allows you to do much more than a self-directed IRA. So I'll just highlight a couple of those things and maybe we could talk more about them later, especially as questions come up. But some of the main advantages to an EQRP because of Section 401 is the UDFI exemption. UDFI stands for Unrelated Debt Financed Income. Super helpful to know if you are going to take your retirement funds and invest it in real estate, specifically real estate that is debt financed, which is 99% of the time you're going to run into debt financing with real estate. John brought up, that hopefully we'll talk a little bit about some of the investments that our members are engaging in. This UDFI exemption is going to come in handy when I go back and talk about some of those investments later. So that's one of the primary reasons that people prefer an EQRP over a self-directed IRA. The UDFI exemption, it prevents a tax on an individual's gains with their investment. Most people who invest, they don't want their they don't want their capital gains taxed. So you can avoid that with this UDFI exemption. We'll talk a little bit more about that later. Two other benefits to just bring up. With an EQRP, you can borrow from it for yourself. That's very, very unique. A self-directed IRA does not allow you to do that. So if you needed to, let's say you took on a fix and flip I was just talking with a client today. They just bought a fix and flip. His name is Andrew. He's been an EQRP client for a while, and he's got a lot of work to do. He's going to be putting in some effort to get that property fixed up, and then he's going to flip that thing. He's done this multiple times before, but he's never done it with self-directed retirement funds. And because he was able to he left his W-2, he rolled over his retirement funds to an EQRP plan. Now he's able to use up to $50,000 from his EQRP plan as a line of credit. So let me just kind of paint this picture for you. Andrew bought the fix and flip. He needs to maybe put $40,000 worth of renovations into the property without having to go to the bank or without having to put this on a credit card. I know people that do that, or a home equity line of credit. He went to his EQRP plan that has $40,000 available. We issued a loan note for him same day and had those funds moved from his EQRP plan into his personal checking account. He immediately got that cash, went to Home Depot, paid some invoices. Now he's able to flip his property much quicker had he actually gone to the bank to try and get some financing, go through underwriting, all of that stuff. So that's a huge advantage that a lot of people actually gloss over. And it's a resource for you for quick financing. You can't do that with a self-directed IRA, unfortunately. Last but not least, I thought about this earlier when I was talking with CC before we started, but you've got a small business owner out there that wants to defer some of their taxes, whether that's some of the taxes that they pay themselves as an individual. You can do that with an EQRP. You can contribute significantly more to an EQRP versus an SDIRA. Let's say CC or any other small business owner out there wants to maybe write off some of the taxes on their business return. Fortunately, as a small business owner, you can make a profit sharing contribution to your EQRP as well. So there's a lot of flexibility with contributions. If you theoretically add it all up and there's an individual that's under 50 years old, 2024, they want to make some contributions, you can make almost $70,000 worth of contributions to an EQRP, which defers taxes for you. It reduces the taxable burden for your business. And then lastly, it grows your EQRP by $70,000 so that now you have more to go reinvest. You can't do that with an IRA. You can make contributions, but the contributions are a tenth of what you can contribute to an EQRP plan. So just wanted to start with those fundamentals, some of those benefits, some of those things that stand out to members who are actively switching to an EQRP. I'm going to pause right there. Again, John, I've got multiple points here that we'll cross into, like why someone would choose an EQRP. What does it look like for a member? Some do's and don'ts like you brought up, but are there any questions before we move on?
I have one. Well, I have a couple
Go ahead,
actually.
John.
So
Yeah.
when you are borrowing against your EQRP, you said the limit is up to 50,000. Is there a minimum balance needed to hit 50,000?
Yeah, that's a great clarifying question. So this is how it works out when in regards to the terms. You can borrow up to $50,000 from your EQRP, but you cannot, or I'm sorry, yeah, you can't exceed 50% of the EQRP value. So let's assume you have $200,000 in EQRP value. This is a real-time scenario. And an individual has deployed 150,000 of that into a commercial real estate syndication. The overall value is still $200,000, which means they can actually borrow up to that maximum $50,000. They still have $50,000 in their EQRP plan that they can pull right away. That is a perfect case study. This is what the terms look like for something like that. You can lend yourself that amount of money up to 5 years. So no, the term can't be greater than 60 months. The interest rate per IRS standards, they specifically say that it needs to be comparable to prime. So when EQRP, the company itself, helps you build out that promissory note or that loan note for you, we'll look at the Wall Street Journal prime that day, and we'll determine that will essentially be your rate. You create your amortized loan payment. You can actually structure the payments a little different than a traditional loan. You can have it as a traditional monthly payment, but you can also do quarterly if that's more convenient. But it still has to be amortized between principal and interest. The nice thing is nobody is receiving that interest other than yourself. The interest plus that principal you're paying back goes directly into your EQRP plan. So it's in theory actually increasing the value of your EQRP.
Okay. So comparable to Prime and then a 5-year payback period amortized, can you just pay it back for the 5-year period? Is up?
You sure can. Yeah, you
Okay.
could always pay it back sooner than the term and no prepayment penalty or anything like that.
And does it affected by the prohibited transactions rules?
No, it's not. That's the beautiful
Yeah.
thing. So you don't necessarily have to document where is this money actually going as you're borrowing. So, it could go to uh, let's say there is a family emergency, you needed to support somebody. You could use the funds for that. You could use it for yourself, your small business. First time home buyers, people will use it for first time home buying. In those instances, it's pretty unique. If you were to actually use and take a loan out of your EQRP plan, the term is extended far greater when the funds are used for your first home.
Cool. Did not know that.
Yeah. Okay. Well, let's kind of keep moving along here. And again, I'll pause every 3 to 4 minutes, but I figured I'd hit on why someone would actually choose an EQRP. Um, the typical reason behind somebody using an EQRP or choosing EQRP is because they're pretty much fed up with the performance of their current retirement plan. You've got typically most people who leave their W-2 job and maybe they move on to a different company. Let's say somebody was employed by Wells Fargo Bank and they decided to move over to Chase Bank after maybe 15 years with Wells Fargo. Those funds will typically stay in their Wells Fargo participant plan. Sometimes the individual will be encouraged to roll it over to the new Chase 401k plan. But those people, those participants, those owners of those funds are kind of fed up with the performance of their 401k. Maybe, we saw something not this last Monday, but the Monday before, we saw a lot of news, a lot of, scuttlebutt around the market, the stock market. I mean, people were genuinely concerned about it. Some people weren't, but there was a lot of people that were like, what is going on here? Like, it was all over the news. And in those instances, we get phone calls. People are just kind of fed up with the up and down. They're fed up with the uncertainty. And so ultimately it's those individuals that are looking for solutions. And it's either by word of mouth, maybe they're in forums or groups much like this one, and they hear about this concept of taking the Wells Fargo funds that they had, even though they're over at Chase, and maybe they even rolled it over to Chase. They can still take those Wells Fargo funds, move them into a self-directed EQRP plan, and now they're investing it in an asset like real estate. Maybe they got connected to the Gator Group, and maybe they're really interested in doing some private money lending. Maybe they want to go lend to some of their colleagues because they know that there's actual value there. It's actually something they control versus what they're watching come and go on Fox Finance. So that's probably one of the biggest reasons why people choose EQRP. And of course, what does it look like for a member who gives us that phone call on that Monday and says, hey, I'm fed up? We have a strategy session with them. That's what we like to call it. We basically like to ask a bunch of questions and get a better understanding of what are your intentions? And a lot of the times people will say, hey, I'm just fed up and I'm looking for alternatives. In some cases, they know what to do. They know what they want to do. That's what I mean. They know that they want to invest in a particular asset class or they want to invest in a specific investment group, right? In some cases, they don't know what to invest in. They're just darn right fed up with it. And so we try to educate them. We actually try to show them some case studies with people who invest in precious metals. A lot of people will hold precious metals to hedge against inflation. We'll show them some private equity options. Sometimes those concepts or those investments are so new to these individuals. It's a lot to take in. But at least during that strategy session, we understand ultimately what they want to do. Then we show them some options. And then in most cases, we onboard them. We walk them through the process. We introduce them to their account manager. Could be JP, it could be Jennifer, but right away they're interacting with their account manager to kind of walk through that process of, I've got to roll over my money. I just left my job. I've got all this money sitting in a SEP IRA, or I've got it sitting in a 401k. I need your help. Cool. I'm JP, and I'm going to go ahead and do all the heavy lifting for you. Let's knock that out together. So JP does all the paperwork. He's working with the custodian. And ultimately, your retirement funds are now sitting in an EQRP that you control. So you pretty much have the power of the pen to invest in the assets that you want without anybody in between you. There's no IRA custodian that's, interested in the asset and wants to, vet the asset because they, in theory, are the custodian. They're holding in custody that asset. It's different with an EQRP. You are the decision maker. There's no custodian. We follow a completely different section of the IRC. There are some do's and don'ts, but we make you aware of those, and I'll go over those here in just a second. But before I do, any questions on what I just shared? Cece.
So, checkbook account with it, is that how it works as like a directed does?
Yes, that's a really, it's like an industry term to say checkbook control or checkbook IRA. The concept is the exact same. The concept is you have a checkbook, you can write a check and you can invest. It's the exact same thing with an EQRP. But what it really looks like, CC, is you identify your investment. It could be maybe you want to lend to a company or an individual. You log into your online banking with your EQRP plan that we established for you. You initiate the wire transfer to that entity that you're going to be privately lending to. Now the funds are moved. The transaction is finished. You didn't have to wait for anybody in between. Great question. Did I answer that okay? Okay, great. Well, let's move on to a little bit of the do's and don'ts. We'll cover more as we go along, but I thought it was great that John brought that up. What are some of the do's and don'ts? Because there are some. The list of don'ts is really, really short. Okay. So let's first talk about eligible persons or eligible entities that you may invest with. So the IRS has actually established these standards. If you decided to invest in an investment that was being managed by anybody in your direct lineage, let's say somebody was syndicating a beautiful piece of real estate and it was a great opportunity. The rate of return was outstanding. However, it was your father that was actually the general partner. Like he was the one making the day-to-day decisions. Unfortunately, you wouldn't be able to invest in that syndication despite the fact that it's a really great opportunity. And it's because the IRS set that rule. They said, listen, if you're going to self-direct your retirement, if you're going to use retirement funds to invest, we're just going to come up with a funky rule that says you can't invest with anybody in your direct lineage. That's your mom, your dad, that's your spouse if you're married, and your children. Now, if it's my brother, he's not necessarily per IRS standards in my direct lineage. So my brother is syndicating that property. I can absolutely invest in that syndication, even though he's the general partner, making day-to-day decisions because he's not in my direct lineage. If it's my cousin, if it's my brother-in-law, those are people that I can invest with. So you can see that there are some don'ts, but it's really narrow. It's not as broad as you might think. There are some assets that you can invest in. So unfortunately, you can't invest in collectibles. So we've never come across this, but if anybody ever wanted to invest in art, it's obviously an asset that people do actually invest in. You would not be able to invest in that asset. If they were collectible coins, this is not referencing your gold and your silver in circulation or your gold silver bars that people will invest in. These are different types of collectible coins that would be considered collectible out of circulation. I do want to highlight, I kind of lost track of something. Any questions of that before I move on? That might help me think of my thought here. Yeah, Cece.
Me again. Um, with the direct lineage issue, would the workaround be that you pull out the loan if you wanted to?
Oh, so good. Cece, this is actually a really good case study to review. I had a client and his name is Jeff. He wanted to actually be a general partner in a syndication. He's been an architect his entire life. And he's seen a lot of value in this opportunity to syndicate real estate. And so he's connecting with us and he's saying, hey, Joel, I've got these ideas and these opportunities here. Can I use my EQRP funds to invest in a syndication that I'm going to be a general partner in? We said, unfortunately, no. But your alternative is to actually take a $50,000 loan from your EQRP plan. He did that. It was just what he needed. I think the minimum commitments were $50,000. So he was actually able to walk in with skin in the game as a general partner. It validated his, his worth as a general partner. So he was able to find a solution to that. So CC, you hit it on the head. That is an absolute workaround. Okay. Well, let's move on to just a couple of other points here. Let's talk a little bit about the investment journey. So I'd like to bring up a couple of case studies here that I think would be really, really relevant. I alluded to the fact that a lot of people will get connected to us because they are fed up with not having control of what their retirement looks like. Maybe they're early on in the game, maybe they're in their 20s or 30s and they have enough accumulated to actually do something with it. Maybe they're a little bit later in the game. Maybe we'll just say later in the game is your 50s, maybe even in your 60s, and you're still working or you're still trying to kind of build up that retirement before you distribute. You come to us and maybe you're unsure of what to invest in. That's actually okay. I mentioned that our account managers are well equipped to help you uncover opportunity. So a couple of things that we've done outside of the group that you're already a part of is we help expose you to alternative asset classes. A lot of people are aware of private equity opportunities out there. Maybe there are people in your network that are exposed to some really nice private equity opportunities. But then again, there are people that are not. And so we educate them. We actually give them the facts behind what is a private equity in the first place? What is your role as the investor in private equity? And what does it actually look like? What are some of the industries that are a part of private equity? Where can I find it? Just to give you guys a really good example, here in house, we have another company. It's a private equity company, and we are currently raising capital for a project out of Arizona. And this private equity opportunity out of Arizona is unique in the fact that there is a high demand right now for housing in Arizona. They can't keep up with the demand for real estate in Arizona right now because of the growth and how quickly it's growing. And so we're currently financing a business out of Arizona, and they've essentially built a new way of manufacturing framing so that they can speed up the process for manufacturing housing. So it cuts down on time, which obviously, helps supplement some of the demand out in Arizona. Well, considering we are the company that stepped in to help with the financing for that manufacturing business, you as an individual who rolls over their EQRP money can be an investor in that opportunity. So that's private equity right there. And obviously, when the time comes, when maybe FrameTech wants to buy back their equity, maybe they want to sell, you as the private equity investor receives your capital, or I should say receives a payout based on the value of your share, right? So we'll expose you to that entire journey. We've got a lot of people inside of our community that are private money lenders. They've got a lot of experience. They know how it functions, and they want to build up their communities even more. They want to build up their connections more and more. And so we would bring you in and we would show you that community, and we would try and connect you with some of those people so that you could just have a bigger network in this industry, in this asset class. So When I talk about that investment journey, um, it's our goal as, account managers to help you deploy your capital, to help you use it. And so we work proactively to make that happen, whether that's, like I said, connecting you to people, maybe putting you in front of opportunity, educating you, answering your questions. You don't have to feel like, this is a transactional relationship. In fact, it's very much relational. So that's what it looks like in terms of, jumping into that investment journey. John, what questions do you think you and I should start going through and touching on?
Yeah, so after the strategy call, what's the typical process of getting the money out of the existing retirement account and moving it over to an EQRP?
Phenomenal. Okay, let's talk about that. Is there anybody on the call right now that has a 401k or any type of retirement plan with either a custodian or an old company? Is there anybody that I could use as maybe a case study here on the call right now? John, you had a retirement plan. Am I correct to say that?
Yeah, it finally became eligible and the money finally hit a couple weeks ago.
All right, so we're going to use you as an example, if that's okay.
Yeah,
So
sure.
where were your funds held in custody?
So I had money in a retirement account from my previous employer, which I actually rolled over. So when I first discovered you all, I was still working at a W-2, and I had money that I had rolled over from a previous employer into my current employer's plan. So we started off taking the money I had rolled over into my current employer's plan, open up the EQRP, and then when I left my former W-2, uh, that money became eligible, I think 30 days later.
Perfect. Where was that money held?
John Hancock?
Perfect. So John Hancock is a very common, we'll call it administrator of 401k funds for employees. So just like John mentioned, he severed ties with his old employer, gave us a buzz and said, "Hey, I've got some eligible money coming up here in 30 days. Can you help me roll it over?" Absolutely, yeah. Let's knock this out. We dig in and we typically understand what the process looks like for those releasing administrators beforehand, just because we do it so often. So we call John up and say, "Hey, this is what it's going to look like." And I don't know exactly what it looks like for John Hancock right off the top of my head, but let's just assume it's with a form, which is very common. We'll fill out that form with John. Sometimes our clients know how to fill them out pretty well. It's the typical stuff like your name, your personal information, and so forth. But we make sure that it's marked as a rollover. We would never want it to be a distribution. And in some cases, the releasing parties, they want to distribute it for the individual, or they want to, mark it off as a withdrawal, and that could hurt the individual. So part of our role is to step in as the middleman and to really say, "Hey, no, let's do this the right way. Let's make this a rollover, a direct rollover." So we do that. We fill out the paperwork, we submit it to John Hancock, and then ultimately they release the funds, and they typically do that in the form of a check. It's like very traditional. In some cases, they'll do it electronically, but most people who are listening just need to be prepped that it's going to be issued in the form of a check, and we'll make sure that it's issued in the name of your EQRP. We actually give your EQRP a name. And so John Hancock will issue that check in the name of your EQRP and mail it to you. It's at that point that we got to get it from you into your new bank account that we build for you for your EQRP. So that moves from one account to the new account, which is your EQRP. You're the signer on that account. You have the ability to transact. You can pull, you can move. So that's kind of that movement process. And then it's from there, the funds are sitting in John's account ready for him to either wire it to a commitment that he's already made, or maybe he's just going to sit on it for a little bit until he finds that golden opportunity to lend it to somebody. It's at that point that, again, he signs on to his online banking, sends a wire, funds are now en route to that borrower. And John's been doing this for a little while now, but typically if it's somebody brand new, we're going to help them record that properly. Some people don't really record transactions, so we walk them through that whole process. We show them on a ledger what it would look like to actually keep a good accounting of that money movement. And ultimately, let's just say that opportunity closes for John. He lent that money to an individual. Maybe 6 months later, that person was able to pay him back in full. All of those funds, the gains, the basis that he actually took out to lend to an individual, all of that will come back into your EQRP checking account. We keep it very separate from your personal accounts because you don't ever want those gains. You don't ever want the basis to move back into your personal accounts or your business accounts because that's disqualified. That would maybe not necessarily disqualify, but rather it would force you to distribute that amount, which is going to create a taxable burden. Potentially a penalty would come along with that as well. So hopefully, John, that kind of cleared it up and painted a little bit of a picture for you.
I do have a follow-on question. So when I do find something that I like, do you help me review the paperwork to make sure that it's all done properly and we're properly secured?
We do, yeah. Now, you bring us the contract. It's commonly called a subscription agreement. Maybe it's even a lending contract that you put together with a private lender or private borrower. We'll make sure that the proper entity is listed on that document. We wouldn't want you to be the individual going into contract with the investment. We would want your EQRP to engage in the investment. So we do make sure that the proper ownership is set up on that paperwork and that you're signing as trustee on that document. So you're spot on, John. We will for sure go through those forms with you. What we won't do, we won't vet the investment. Some people do ask us that. They want us to dig in and find out if this is a good investment for me. Unfortunately, the term self-direct your retirement is literally that. You do need to direct it yourself. You need to make the decisions. That's what people are trying to do when they take back control. They want to be the decision maker and not anybody else. Fortunately, what we do is we try to produce as much content for individuals as possible about certain asset classes that you can go back into our media library and you can watch and you can learn from professionals that are doing it so that you know what to look for. What are some of the do's? What are some of the don'ts? What should I be aware of in this asset class? What should I vet? So we try to do a really good job of putting that in front of you in our media library so that you can walk away feeling educated and prepared to say, so and so told me in that content that I should look for A, B, and C, and I did, and I like this investment. Or on the flip side, ooh, John told me to watch out for that in that video. I'm going to walk away from this investment because it doesn't look pretty. So, you are self-directing, but we've got the resources out there to help you do it.
Cool. I have another question if no one else has a question.
I have a question.
Okay.
Joe, thank you for the information. What if you have a self-directed IRA that you want to roll into the EQRP?
Great question, Kia. We probably have 3, maybe 4 out of 10 of our clients who have done just that. They've operated out of a self-directed IRA and they've maybe felt like it's been a little cumbersome. Maybe they're actually trying to get the UDFI exemption, which we can talk about a little bit more in full here. But what we do is we take those assets, whether it's cash or whether it's a loan note or a real estate syndication, we will take every one of those assets. We will engage with the self-directed IRA provider or custodian, and we will roll all of those over in kind so that there's no taxable event for you, Kia. And ultimately, we will re-register each one of those assets so that it's now your EQRP that is the owner of those assets. So, you can have peace of mind knowing that we'll do all of that heavy lifting for you. And it's actually really common that we do that. We've done this for clients who've had more than 20 assets in their self-directed IRA. We know how to do it. We know how to make it happen, and we do it really clean. Great question. So yes, in short, we do that all the time, and it's absolutely something that we're familiar with. Did I answer that okay for you, Kia? Hopefully. Sounds like I probably did.
the LLC null and void?
Oh, so sorry. You broke out there a little bit, Kia. Do you mind repeating that question?
Null and void, like not needed anymore.
You know what?
Because
I
my
heard,
self-directed IRA. I'm so-
sorry, Kia, you are breaking up quite a bit, but I think I actually caught enough to know exactly what you're saying. I'm gonna take a stab at it. Your LLC that you are using to invest in those assets, you could consider it null and void after that, because ultimately we're going to take all of those assets that are being held in your LLC in that entity, and we're just rolling them out of that, and we're re-registering it from your old SDIRA LLC into your EQRP.
Got it.
Perfect. Yeah, that's actually a
you.
really great question. Yeah. And it's very specific. Self-directed IRAs have an LLC that they invest through. And so, yeah, we would just basically peel back all the layers and push it through till it pops out of the IRA custodian. And then we just re-register it into your EQRP. And then, yes, your LLC would be null and void at that point. You know, I talked about the UDFI exemption. One of the reasons why we have folks that have 20 real estate assets in their self-directed IRA change to EQRP is because of a tax that comes onto their that comes with their capital gains. It's called UBIT, and it's actually a term that's commonly brought up in the real estate, especially the commercial real estate industry. Anytime an individual uses a self-directed IRA to invest in commercial real estate, that commercial real estate, 99% of the time, is debt financed. There is a bank out there that has first position on that property, and a massive amount of that property is financed through a commercial bank. Because of that, it's going to generate unrelated debt financed income. And the way the IRS sees it, if your self-directed IRA is invested in that property that has debt financing, they are entitled to a tax on your gains. So we get a lot of people that phone us and they say, listen, I've got these 20 assets and I've got a couple of them that are going to mature this year. I just heard about this UBIT tax. I'm just learning about it. Can you help me? Absolutely. We'll go ahead and roll over every one of those assets in kind. We do that. We save people an unfathomable amount of money, because depending on how much of that property was actually debt financed, that percentage of the amount financed rolls over to the percentage that your capital gains are going to be taxed. And what I mean by that is, if the property has 50% financing on the value of the property, now your gains, 50% of your gains are going to be taxed. And the process is actually really cumbersome. When you determine how much of that, half of those gains are going to be taxed, it's got a really crazy tiered process. You've got to factor that really well. And if you do it on Form 990T, I've looked at it, I've gone through the process just to learn how it's done. It's very cumbersome for an individual investor to take it on. And CPAs, a lot of the time, it's not a common tax that they deal with. They have to figure it out themselves as well. And of course, they have the wherewithal to figure it out, but with that comes a cost. So short story long, we roll over self-directed IRA clients a lot because of that UDFI exemption that we have. If you don't mind, I'm going to talk about eligibility. Can I do that, John? Okay, cool. So eligibility is very important with a self-directed 401k. So an EQRP follows section 401, which means that the owner of the EQRP has to have some kind of business activity. Okay, so write that down if you're taking notes. The key differentiator between being eligible and not is business activity. So we need to make sure that you're in some way, shape, or form engaged in business activity. Now, whether you do some moonlighting on the, outside of your W-2 job, that's business activity. Maybe you do a little bit of affiliate marketing for EQRP. Maybe you share some of our books with people. That's business activity. Maybe once or a couple times a year, you do some consulting on the side. Great. There's your business activity. That right there will make you eligible. And so I will say this, 8 out of 10 of our members are actually W-2 individuals. They actually collect a W-2. And a lot of them don't engage in a ton of business activity. Some will do some consulting on the side. Some will do some, side work here and there, some 1099 income work, which is great. It makes the individual eligible all the better when they actually generate revenue. But some people, they lean on our affiliate program, and it's a great program. It helps anybody who wants to be eligible become eligible because we show them how they can essentially share our brand with others. And like I said, it could be as easy as us sending our EQRP book, which is a part of our business, to market our company to people that they know in their communities. So I just want to make sure everybody here who's thinking, I really want this. I want to have an EQRP. There's a lot of flexibility around it. You start with the eligibility. Am I eligible? Do I have my own business? Am I engaged in business activity? Okay, I am. Or shoot, I'm not. I do my W-2 thing and then I come home and I spend time with my family every night. It's okay. If you do want this, let's talk a little bit about how you can generate some business activity throughout the year. And let's talk about how you document it. And if you want to even engage in our affiliate program, great. Let's go ahead and talk about that. Let's run through and kind of map out what that would look like for you over the year. Do a little bit of marketing on the side, and that checks off the box for eligibility. Any questions on that? Yeah, Cece, please.
So you generate the business activity, doing a side gig, doing your affiliate program, whatever. Let's say you do this for 5-10 years, right? You've reached the ripe old age of now you're saying, okay, I've got to withdraw from my retirement account. And you go, I'm not really doing a lot of business activity. What happens to your EQRP account then?
Great question. We actually have people that have had this happen. You have a couple of options. If you're at that point in your life where you are ready to actually distribute, it's like, you know what? I'm done investing in these alternative assets. I've been very active. I'm ready to distribute. You can actually roll it into an IRA. So you can take those funds, move it into an IRA. You could move, if you still have assets, into an SDIRA. But in those cases, it's rare. It's typically that you've maybe liquidated all of your assets and you might be just sitting on cash that you want to distribute over time. So we would just help you roll it out and into an individual retirement fund or an IRA.
So basically for someone like myself, not quite at that distribution age yet, but I would take the money I have in the IRA now, plan the rollover to the EQRP, later down the line, put it back into an IRA.
100%.
Okay.
And the same distribution rules apply, same minimum distribution rules apply. Required minimum distributions when you reach that age. But in theory, by that point, you're ready to kind of step back from, I would say like hustling, just putting this into assets that are, performing at that point. Maybe you still have it in alternative assets, but it's a self-directed IRA, and maybe there's less commercial real estate so that you're not hit with that UBIT tax. But yeah, great scenario and great question.
That UBIT tax goes for commercial real estate, not so much for residential.
I'm sorry. Yeah, great clarifying question. It's specific to unrelated debt financed income. So the exemption is beneficial when you are investing in real estate that is debt financed. So it could be single family real estate that is debt financed, or it could be as big as commercial. So the UDFI exemption is specific to real estate.
How long has EQRP's been around as compared to the self-directed IRA?
So a self-directed 401k has been around, since I believe the early 90s. Both essentially have been around since the 90s. An EQRP, which operates under Section 401, the same as a self-directed 401k, we've been around for a little over a decade. So the founder of our company started this company about 12 years ago, operating, under that self-directed 401k umbrella. And to be honest with you, I think it could have actually, I think the self-directed IRA and 401k concept could have been around even longer than the 90s. I can't remember specifically.
Thank you.
You're welcome.
So I have a question. Let's say I have a gap loan or lending opportunity that's $50,000. If I have 25,000 in my EQRP, and can I pair that with $25,000 out of my own checking account and invest in that opportunity?
So yes, yes. The short answer is yes. You could use your personal and your EQRP funds to invest in investment as long as that investment isn't tied to you specifically.
Okay. So then 50% of the profits would go to the EQRP. The other 50 would just go back in my checking account.
Exactly right.
Okay.
This might be one of those dumb questions, but there's never a dumb question kind of thing.
That's right.
So when setting up the lending business, I have heard that you want to set up an LLC. So that's your front-facing lending business, right? So there's a registered agent with that. So all of that goes with that. Is this that front-facing LLC, or is this completely different?
That is not a dumb question at all. That's a very important question. So you have two options. You can invest directly through your EQRP plan itself. A lot of people actually do that. But you bring up a good point, CC. You're operating now a lending business. That's a whole new, or not a whole new, but an entirely different type of asset class. As a part of an EQRP membership, you do get an LLC. We call it a pass-through LLC that is member owned by your EQRP itself. You're the manager of that LLC. And a lot of people like having that LLC as that barrier between the investments that you engage in and your EQRP plan itself. So we're happy to build that for you. We do like to build them out of Wyoming. They are tax exempt entities because, again, it's member owned by a tax exempt entity, which is your EQRP. And we like the anonymity. There is still some level of anonymity with an LLC like that. And so we most certainly can do that for you. And hopefully that painted a little bit of a picture of what you could do and how it tied to your question.
I'm going to ask a question that might dumb it down a little bit better for me.
Yeah.
So you've got the LLC that is part of your EQRP. And then you would have the pass-through LLC, that's the anonymity LLC, right?
If I may. So I would say it's broken up into 3 layers. You have yourself as the individual that sponsors your EQRP, which is in and of itself an entity. It's actually a retirement trust. If you were to call it an entity, it's got to be a specific type of entity. It's a retirement trust. Now, that retirement trust has a pass-through LLC right below that. So it's the individual as the sponsor, the EQRP itself, that is the retirement trust, and then as an option for the anonymity and the limited liability, just to have that LLC, that's the pass-through. That's the entity that's member owned directly by your EQRP. It's tax exempt. You don't file a tax return on it. So it's a pass-through for your EQRP. Did that kind of help break it down a little bit for you, CC?
So the money, like if I'm got the investment, my money's in my EQRP, I would pass it through the LLC, and then lend it out. So you've got the anonymity.
You got it.
If you go directly from your EQRP, you don't have that anonymity.
That's exactly right, because your EQRP will actually be, the title of that retirement trust will be CC Gonzalez EQRP 401k. And as you can imagine, if you're going to go invest with somebody who maybe you want some anonymity, they're going to see your full name on the lender side. Or if they, you know, heaven forbid, I don't even want to say this, but maybe they want to try and sue you. You know, your LLC will create that limited liability if you're going to invest through that. And any remaining funds that are in your EQRP in theory have limited liability.
Okay. Thank you.
You're very welcome.
Receiving money. I've had trouble with that with my mom's account, with funds getting pushed back. What is the process for receiving principal only or interest only payments and principal?
John, you might have to help me understand receiving money. Tell me a little bit more.
Sure. So I loan out $120,000 at 10% interest for the year. So how do I receive those interest only payments?
The exact same way in theory that it went out. So the individual or the borrower that is making those interest payments back to you will just even bottle in the principal. So whether it's both principal and interest or one or the other, they need to wire those funds back to your EQRP checking account. Maybe they don't want to do wire, then they need to send you a check and they need to make it payable to the lending entity, whether that was your EQRP, the John Chan EQRP 401k, or your LLC that you built for that, you know, that added layer there. So wire transfer, maybe they want to do Zelle. You know, I know that that's actually a very common form of people sending payments. If it meets the limits, that is a way that funds can actually be moved from one bank to another. But I would say wire is the most common. I get it. There's actually an expense that comes along with it. You don't have to pay for that expense on the EQRP side if money's coming in or going out. However, you know, it might cost that borrower some money to wire those funds. So it's just got to be baked in to the process, or maybe they need to send you a check and you can have that check sent to yourself and then you got to forward that to the bank.
Okay. Yeah, that answers my question. Thank you.
You bet.
Any other questions?
I have a question. So you go to, let's just say, Wells Fargo and open up a bank account. You don't need to do that here, or do you still need to do that?
Great question. We do that for you, and we do that with a preferred bank. The reason we do that is because in most instances, it's challenging for somebody at Wells Fargo Bank to open up a checking account or a bank account in general for a self-directed 401k. Maybe they struggle a little bit with the concept, or maybe they just struggle with what type of entity is this. We already have a banking relationship that we've been nurturing for quite a while, and the majority of our clients are a part of that. Bank membership. So we'll do that for you. We'll set it all up, and you can have peace of mind knowing that there won't be any real hiccups. And ultimately, it's also an FDIC bank that's insured identically to Wells Fargo.
Yeah, I've opened up accounts with two different vendors, EQR being the second one, and it's been so much easier opening it up here than with the other vendor.
Appreciate that, John.
I have to leave to go to a meeting. But thank you so much for the information. I'm sure my brain doesn't process questions like in the minute. So how could I follow up with you if I have questions, later or tomorrow?
Yeah, I love that. Let me go ahead and just put my email right here. In fact, Caitlin, I think you've already got my email.
I do
But
have your email, but for
all
other
right,
people.
cool. Yes, great question for sure. So I put my email there. If you forget, just tap on John's shoulder and say, John, I need you to get me connected with Joel.
Yeah.
And he's really good about that.
Yeah. Awesome. Thank you so much. I have to run, but nice to see you again,
Thanks,
and thanks for all
Caitlin.
the
You
information.
too.
Bye.
Yeah, you're very welcome. Take care.
Now, Joel, are you part of the Gator Sub 2 system?
No, I'm not. Great question. But we have a lot of members that are a part of it, a lot. And so I'm very familiar with the community. I'm actually doing a webinar in 2 weeks with somebody in the Sub 2 group. Her name is Ingrid Hernandez. And then, of course, I know John knows a ton of them as well. But there's a lot that we're connected with. They find a lot of value in using an EQRP. I'm doing another webinar with another group, a private money lending group, a week from today as well. So I'm not a part of it. Sorry, I kind of went on a tangent there, Cece, but I'm very much exposed to this community because I didn't realize honestly how big it was. And then I funny fact, I didn't know that the founder of our company, Damien Lupo, his real estate journey really took off initially because of sub 2 lending. And of course, that was over a decade ago. So he's a huge believer in it as well. And short story long, that's my exposure to the community.
Now, when someone like John or Ingrid, they do a webinar and throw it out there to the community, is that giving them affiliate credits so that they're having business activity?
Spot on. You're spot on. Ingrid Hernandez, for example. Funny enough, I don't know if this is common knowledge, but I know she recently left her employer, but she worked in analytics for John's shaking his head. So it's like she worked in analytics forever. But then she was doing sub 2 on the side, and she hosted a podcast, and I went on her podcast.
I've listened to some of
And
her.
she's and so that was her way to do affiliate activity while she was still doing her W2 work. Amy Misnick, I'm dropping names, maybe I should, maybe I shouldn't, but Amy Misnick's another one. She's a pharmaceutical executive by day, EQRP sub 2 affiliate by night. So she's doing some activity like that to she shares the word, spreads the mission. John's a phenomenal advocate of ours as well, and he shares a lot. So yeah, it does check off the box for a lot of them for the business activity.
Obviously, after 30 plus years in the executive recruiting business, I wasn't looking to continue a lot of quote unquote business activity other than the Gator side. So my mind just starts turning on how to do that easily. So that would depend also what documentation is needed for the EQRP to show you are having business activity. Great
question. Yeah, we do have an agreement, and we built that for our clients so that they can call themselves an affiliate. I mean, it's got to be legitimized. And so we do have that, and that's available to you. So that first and foremost makes you an affiliate. Secondly, you do have to document it. You do have to have some type of paper trail, if you will, to substantiate that, yeah, I engage in some affiliate marketing. I can understand that you probably stepped away so that you could find some maybe peace, from from the grind in that executive role. But, I think it would surprise you how easy it is to actually do a little bit of affiliate marketing to check off that box. And it could be as simple as, maybe in the Gator group, just sharing your every quarter or a couple times a month, just depending on how frequently you want to do it, just sharing your take on the EQRP journey, maybe how it's helped you. We have resources to help in any capacity that you want. You kind of set the tone, and we'll give you ideas to help you check off that box.
One last question, and then I promise
Okay.
I'll move on to a strategy session appointment type. But
Cool.
tax purposes, is it just like every other IRA, we're just filling out paperwork for our accountant at the end of the year, or is this different?
Great question. I didn't go into that, but I'm really glad you're asking these. So once a year, there is a form that needs to be filled out. Very simple. It's the valuation form. The IRS does like to know the value of all qualified plans. And so we've done our part to create, we like to call it a survey. We send it out months in advance to our clients. Say, hey, fill this out. You know, what kind of assets do you have in your plan? It might take somebody for the first time to do it 15 minutes. We prefer to do it actually with your account manager so you're not lost. Once you're done with that survey, we create the form, we put all the figures in, and then we send it to you and we say, take a look. If this looks right, we'll review it with you over the phone or on Zoom. Great, sign it, send it, you're done. So you don't have to file a tax return or any other type of return for it other than that. Now, CC, if you were to actually make contributions, let's say you're generating some income and you actually want to defer some of that or put it into the EQRP, that's a little bit of a different story, right? You will, obviously, that'll be a part of your survey that I was talking about for the 5500 form, but you'll obviously want to tell your CPA, hey, I actually made some contributions to a self-directed 401k, my EQRP. This was the amount. And they're going to help you fill that out because it's a couple of line items on your 1040. Or if you did a business return and you decided to do some profit sharing, it's going to be a line item there as well. So it would definitely be a newer part of your return if you started making contributions, but certainly not complicated.
Hoping to keep all profits within the tax deferred accounts.
Oh, for sure. For sure. I agree.
Well, I appreciate you guys doing this. It's very helpful since I was right at that stage of getting this done.
Beautiful.
Yeah,
we're
thank you for
I'm
coming.
grateful.
All right, guys.
Yeah.
Thank you.
Thank you, CC. All right, John.
I appreciate it. Thank you so much for doing this.
My
We'll get
pleasure.
this posted. Do you want the raw footage of this one as well?
Would love it. Yeah, I think that
Okay.
this is a great opportunity, and glad that we had some great questions and engagement. Just looking forward to connecting with as many as watch it.
All right, cool. Again, I appreciate your time. Thank you so much.
Always. Take care, John.
All right, you too.
All right, bye-bye.